BYJU'S, the ill-fated fall from grace of the edtech giant, once valued at $22.5 billion not long ago, just July 2022, has seen multiple challenges plague its existence. Of course, there has been a $1.2 billion Term B loan, which the company does not know how to repay yet, a distressed sale of some of its US-based platforms, including Epic and Great Learning, a change of board, a fall from grace, like I said, and now in the third round by the same investor, Prosus, the valuation of BYJU'S marked down for the third time, now from once $22.5 billion to under $3 billion. Barnik, Chitran, Maitra, managing partner of R30 Little India and South Asia, joining us here on News 9. Good morning, Barnik. What do you make of this latest round of Prosus cutting down, slashing really BYJU'S valuation?
Good morning, Kartik. So this doesn't come as a surprise at all. In fact, if you look at the news leading up to this, BYJU'S has partially announced their FY22 numbers, where the standalone entity's revenues are around 3,500 crores with a negative EBITDA of 2,300. He had committed last year that they would do around 10,500 to 11,000 on a consolidated basis. So it seems that they have fallen well short of the number once it gets announced. And this is the least of their problems. Right now, BYJU'S is a company in trouble. They're trying to raise money. They have one white knight in Ranjan Pai who's coming and trying to rescue them. There are reports that he has already infused 250 to 300 crores into the parent. But any future capital infusion will be subject to corporate governance, announcement of FY23 audited results, where there was a commitment from the board, which, by the way, now is no longer a multinational board, but just a promoter board with BYJU'S and his family members, right, to release it by December end. And it is quite likely that they will even miss the December deadline. So I think lots of trouble for BYJU'S. I think there was an ED notice yesterday as well. That may have been one of the triggers for the markdown. So I think the markdown is expected, but this is the least of BYJU'S struggles. I think the major concern is having enough capital to continue as a going concern and not go belly up, which is quite likely given the situation they are in right now.
Barnik, what could really be the problem in the FY23 financials? Because for some reason, there has been delay after delay after delay. As an independent analyst who works so closely with startups, what do you think could really be the issues that BYJU'S does not want to make public, or not make public right now at least?
So first of all, their auditor Deloitte resigned in June or July, right?
Yep.
Which suggests that BYJU'S has raised money, right? 12 months, nearly 12 months or 15 months back, based on a projection. I suspect that the numbers which will come out will be far lower than the numbers which he has promised his investors. There have been complaints in the past of also how BYJU'S has a tendency to recognize revenue and recognize costs. I think given the increased corporate governance scrutiny, that's also going to have an impact in numbers. I think this is just deferring bad news as much as possible to try to ensure that whatever money comes in comes at a sensible valuation. But I think that major problems remain. There is lack of corporate governance. You have a founder who's effectively on the run. I don't know when he's last been to India to run his company. I think investors, even the white knight, Mr. Pai, is demanding better corporate governance and probably a relinquishing of control from the founder in running the company. So there are many things going on, right? And you mentioned the $1.2 billion term loan, which, by the way, there has to be a line of sight to pay that down. Akash has effectively been taken control of by Ranjan Pai and with the founder coming back to run the company. So again, the delay could be the numbers are just not there, and it's just going to be even more bad news. And even with the newer numbers, maybe even the $3 billion valuation doesn't seem justified.
All right, $3 billion doesn't seem justified, but just for sake of clarity here, Barnik, a markdown in valuation is not typically a down round. It does not mean that BYJU'S is out there now trying to raise capital at $3 billion of its valuation. It is just Prosus marking down, slashing on its own books, on its own asset side, the value of an asset once valued at $22.5 billion, now valued at $3 billion. Is that right? And what does this really mean for future capital raise from BYJU'S whenever it feels the time is right for it to raise money?
No, so Kartik, you're right. A valuation markdown is not the fact that capital is being raised at this value, but it's a very important guidance to future investors on what existing investors attribute value to, right? I believe it's highly unlikely, given what we've seen, that the next round of capital, when raised, will be anywhere close to the peak of 22 or even close to 5.9 billion as of last year, right?
Right.
So let's take it as a guidance, right? But I would take it as I would say an honest guidance, because Prosus has been one of the earliest investors into the company. I think till the board member resigned in June, I think they were one of the biggest backers of the ecosystem.
That's right.
The fact that they are marking down, they may be a little bit more conservative, but I don't expect this to be the last markdown happening in BYJU'S, and any future fundraise will be at significantly depressed valuations, right? Nowhere close to the peak.
All right, Barnik, before I let you go, just one more question. We also saw, in fact, when Prosus was marking down BYJU'S earlier this year, it had also marked down value of Swiggy and Meesho. And now, in the latest round of news which is coming in from the investor, it is saying that both Swiggy and Meesho are among the better performing companies in its India portfolio. So, are markdowns and markups a regular part of business?
Yeah, it is quite, right? So if you have, it's pretty similar to public markets as well, right? If you have good news, your share price drops. If you have bad news, your share price drops. If you have good news, share price picks up, right? Private markets tend to be a little bit more stickier, means that markups and markdowns are a little bit more conservative. But the investor who has fiduciary responsibility to his investors has to report the right set of results. So if there was a set of numbers and forecasts which did not justify an existing valuation, the investor owes it to their parent and to their LPs to reflect the true value of the company. Now, if the company's turned around, I think, and both these companies have done a lot of work on cost and profitability. Meesho is now the first horizontal e-commerce platform which is profitable. Swiggy has cut costs significantly, right, and is preparing for an IPO. So good news means better valuations. So I think this happens on a day-to-day basis in public markets. It just happens more infrequently in private markets, but it's not surprising given the scale of these companies and the volatility of the market and the business performance.
Right. And Barnik, if Baiju Ravindran was to step down, would it be a decision? I mean, of course, at one point it would be the morally correct thing to do because you have messed up so much. But then would it help in some way turn around the fortunes or the misfortunes of the company as we see it right now?
So it seems right now that he does not enjoy the confidence of his investors, right? If you note today, the promoter and the owners as of last filing, own around 27% of Think and Learn, a significant portion of which may also be pledged to Ranjan Pai and his group, right? So you do have investors who probably own more than 75% of the company. And if the CEO does not enjoy the confidence of the investors, I think it's better that the CEO figure out a way to transition the business to someone. I think the new India CEO is already quite empowered and running it. But I think the founder should read the tea leaves and do what's in the best interest of the company, and also what will be in the best interest of raising future capital into the company.
All right, Barnik, Chitran, Maitra joining us here on Business Plus. Barnik, thank you so much for taking out time.